The very definition of money is being rewritten before our eyes. This fundamental shift isn't starting on Wall Street or in the halls of government, but in the digital wallets of millions and the closed-door meetings of the world's most powerful central banks. A silent war for the future of finance is underway, and the crypto trends we're about to break down aren't just about profit. They are becoming critical tools in a global power struggle that directly involves you and your financial sovereignty. Right now, 134 countries, representing a staggering 98% of the entire world's GDP, are actively exploring a new form of government-controlled digital money. This isn't just about convenience. It's the opening shot in a battle for your financial future. What's unfolding is a tug-of-war between two radically different visions for money. One, centralized and controlled by the state. The other, decentralized and open to everyone. Welcome to Generational Wealth, your pathway from knowledge to legacy. On one side of this conflict are central bank digital currencies, or CBDCs. Governments are racing to develop them, driven by both economic ambition and geopolitical strategy. After witnessing how financial sanctions impacted nations like Russia, global interest has exploded in creating financial systems that can operate outside of traditional Western channels. This has fueled projects like mBridge, led by China and involving partners like the UAE and Saudi Arabia. It's an advanced platform that lets countries settle trades directly using digital currencies. The ultimate goal is to create an alternative to the US dollar-dominated SWIFT network. While only a few nations like Nigeria and the Bahamas have fully launched a CBDC. Major powers are deep into massive pilot programs. China's is the largest in the world, and India's is expanding, though both are still working to achieve widespread voluntary adoption. For governments, the advantages are clear: tighter control over their money supply and greater efficiency. But this also opens the door to a level of financial surveillance that has never been possible before. We're talking about a future where every single transaction could be tracked, managed, or even blocked by a central authority. This isn't a distant theory. It's the model being actively tested right now. But this push for top-down control is not happening in a vacuum. It is igniting a powerful counter-movement. While governments build their digital walls, a parallel financial system is thriving. One founded on individual control and permissionless access. This is where the second seismic trend comes into play: the explosion of stablecoins. With a market size surging past $300 billion, dollar-backed stablecoins are becoming the bedrock of a new financial layer, particularly in emerging markets. In countries battling hyperinflation, millions are turning to stablecoins as a lifeline to protect their savings and transact freely. This is no longer a niche crypto trend. It's a quiet revolution. Adoption is booming in places like Nigeria and across sub-Saharan Africa, where stablecoins offer a tangible escape from failing local currencies. These two forces, state-controlled CBDCs and privately issued stablecoins, are on a direct collision course. Governments are beginning to view stablecoins as a direct challenge to their monetary authority. While people on the ground see them as an essential tool for their own financial liberation, this growing tension is shaping up to be the central geopolitical battle of the next decade. This is a complicated and fast-moving space. To make sure you stay ahead of what's happening, go ahead and hit that subscribe button and turn on notifications. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Cut through the noise to explain what these trends really mean for you and your money. So where does this all leave us? The battle lines are clearly drawn. On one side, you have state-led CBDC projects designed to reinforce government control. On the other, a global bottom-up movement is embracing decentralized tools. Bitcoin remains the heart of this movement. The launch of Bitcoin ETFs was a major turning point for institutional demand. Even with some pullbacks and slowing inflows in the last quarter of 2025, it serves as a powerful validation of digital scarcity in a world where traditional money can be created without limit. Looking ahead to 2026, we're likely to see this trend accelerate as U.S. regulators move toward clearer rules like the Clarity Act. A bill that has passed the House and is now heading to the Senate. More institutions are expected to enter the market. Stablecoins are also evolving from being just a trading tool into the essential plumbing of the decentralized economy. They are rapidly becoming the go-to payment option for faster, cheaper, and borderless transactions for businesses and individuals alike. We are at a historic fork in the road. The global financial system is fracturing into two distinct paths: a top-down centralized model of control, a bottom-up, decentralized model of freedom. The consequences are immense, affecting everything from international trade to your personal economic power. The question is no longer if this change will happen, but which vision will ultimately define the future of money. Let me know in the comments which path you think will win out. Quick disclaimer: I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.